watch. What does that mean the price will do? It'll rally, right? Because it's offer watch. We're not selling copper. We've got people asking to sell copper, but they're not dealing copper, right? So at 12.17, this is 12.17 in here, we're on offer watch, which means our first view is that the market will probably go north. So when I know that people are on offer watch, there's a high probability what I'll do with that is I'll buy into the press. Because if they're not going to sell at this price, that means the price will go higher. Now, the price might go higher by one tick. It might go higher by quite a distance. But the price will go higher in an awful lot of occasions. And if I get the incentive to do that bit of business, it's exactly the same as this bond. When I put this bond onto an offer watch, the idea is that you can then, if I put the bond on offer watch, for example, against this level, you could buy that level knowing that you're going to get a higher price. And sometimes it immediately sells, and sometimes you get another buy and it gets another higher price. And sometimes it goes, and sometimes you get another buy and you get another higher price. You know, the idea of an offer watch is a commercial seller that's now getting commercial value, which means that the algorithms must be long. The algorithms must be long. That's how the copper offer watch is available, because the algos are long. The HFTs, the prop desks, they must be long copper. So the HFTs must be long copper in an offer watch. So unless you see that trade getting jammed, unless you see the storyline getting jammed, you should be nowhere near that sell at this point. So what does that mean? Well, I look at the order flow and you start recognizing a very clear storyline, right? What's a very clear storyline? The market is teeming with sellers, absolutely teeming with sellers. So there's no way I can sell it anyway, right? So this actually starts to stack up as a very good buying opportunity, because if they're not selling at this point, if they're not selling at this point, and they're going to be possibly selling above here, and everybody's managed to jump in front of that sell, that means there's going to be an even bigger pop to the upside. And as we get the bigger pop to the upside, you can now see the commercial short actually taking place. Look, there it is there, and there it is there. Do you see it? That's your commercial short coming in now. That guy there, and that guy there is your actual commercial short. It's about 40 minutes later. It's the same trade. 40 minutes later, based on the order flow coming in. Because obviously, what are the commercials waiting for? The commercials are waiting for what? What are the commercials waiting for? Volume. Volume buyers, right? When did the commercials finally get volume buyers? Can we all agree that the commercials finally got volume buyers in there? See the delta spiking higher? Is that not the commercial getting that volume buyer that they're needing to start working that sell order? And remember, they're only just working the sell order. So what's going to happen is they sell it, then they cap it, and then they sell it again. And then they maybe cap it again, and they maybe sell it again. So they start working this process. So they sell it. Let me just draw it out on the side here. So they sell it, and when it drops back down, they recognize how much buying is coming in, and then they cap it. And then when they cap it, of course, they then sell it. The cap stays in place, and then a lot of the times they'll get a chance to sell it again. So what will happen in terms of that process is you'll get that right into that sell. The cap comes in and jams. We'll get another sell. The cap may come back in and jam again. We get another sell. They see how much selling is coming in or buying is coming in. They start getting maybe an exhaustion print. They start selling at lower prices after that exhaustion print, and then they rip it. And then they rip it. Rip it. And we can actually recognize that this becomes the failed auction sell that makes the interns jump like crazy. Why did the interns jump like crazy there? Because they've read that level to rejection and they've read that level to rejection. And now they're waiting with real eager anticipation for that commercial failed auction. And the failed auction is created by the commercial joining into that sell at lower prices. This is now a markdown trade. And every intern on the planet wants a bit of this business. And every intern on the planet will be jumping for joy when they get a failed auction here and it starts coming down. And remember, the intern's trade would be the break here. As you develop as an intern, you start to get into the trade with the BSG and the tipping price, and possibly even a little spring trade in here. It's called a bottom right-hand hold, and it is a glorious thing to recognize when it sets up. Well, that kind of happened up here, didn't it? In copper, we got this trade here. We got the capper price here. We got this trade here. Yeah, we actually just about got the third trade here as well. Okay, so we got the second trade here. We got the third trade here. And then you started to see what happened. See how you got the first failed auction here? So there's the first failed auction. When the selling is now coming into the price. Now, you don't know that's going to happen until it drops back towards the bottom edges. So when it drops back towards the bottom edges, your job now is to massively destroy this bit of business now. Selling into the bottom edge, because it might still be a buyer here. They might cap it one more time. It always happens. But you absolutely must be in it before the market breaks south. And obviously, when it breaks, you're making some nice money on the copper price, whether you've sold the passive top line here, and here, or the aggressive bottom line here and here. All 5 trades made money, so long as you stuck to the plan. An offer watch is a long copper trade until you see the offer opportunity. Just the same way as a bid watch is. If you get that wrong and you sell here and then you moan at me, you're really needing your head examined. Because we've told you 1,000 times that that's what this means. If you decide not to use it properly, that's on you, not on me. It's not the signal that's wrong. It's your head that's wrong.